Economists always get very unhappy with the word recession. It depends how you define a recession. Could we have a quarter or two of negative growth? Absolutely, of course we could. Does it mean that much? Probably not. Do I see an enormous rise in unemployment, an enormous dislocation in the US economy? No, I don't. I don't think that that's terribly likely at this stage. Of course, accidents can happen, and one of the problems that we've got is that data quality has become a lot poorer in recent months and indeed recent years. And so the risk of a policy error has actually increased because we're not actually that certain what's going on in real time. So that does raise one or two problems.
It sounds like you probably thought that the messaging out of Sintra was on point. It was pretty hawkish. You had not only Jerome Powell, but Andrew Bailey, Christine Lagarde reiterating their commitment to continue fighting inflation. And it sounds like more rate hikes are in store. Is that the right approach?
So I don't actually think it is the right approach, I have to say, because, yes, the economy is slowing. It's just not in free fall. And I think that we're hearing this hawkish rhetoric because the central banks want to try and influence expectations. Now, that does presuppose that anybody listens to what a central banker has to say. I mean, economists do, but I'm not sure real people in the real world actually go out and pay much attention to Christine Lagarde. So, but I think there is this desire to sort of control inflation expectations. But actually, I mean, the thing is, we're now seeing a lot of really weak inflation numbers coming through, and we're getting this return to a lower inflation environment with a more or less sort of stable, if slightly below trend economic activity. So we're going to get producer price inflation out of the Eurozone today, and it's expected to be a negative number. We're expected to go into absolute deflation when that comes out later this morning. But when you look at it, I mean, anybody who thinks inflation is sticky, pull up a chart of producer price inflation in Europe. It is astonishing. The inflation rate, assuming we get a negative number today, will have fallen 45 percentage points in less than a year. I mean, it's an astounding collapse. Durable goods prices, the original transitory inflation of 2020, 2021, it's completely disappeared around the world, complete collapse. So we are seeing inflation coming down. And Powell standing there and saying, oh, it's going to take 2 years to get core inflation to 2%. Well, no, it's not. Parts of the United States already have core inflation below 2%. Large parts of the United States have got inflation below 3.5%. I mean, we're already seeing these disinflation forces at work.
Why do you think he's sending that hawkish messaging then? Is it an effort to control the market in terms of, preventing investors from getting too excited about the prospect of rate cuts anytime soon?
Well, if I was to be cynical, I would say it's because Fed Chair Powell isn't an economist. And that, of course, is a fatal character flaw for any person. I think that the political climate, we do have to recognise, the political climate is one where inflation has become a highly politically charged issue. And so any hint of complacency on inflation is problematic. Now, the Fed was saying back in 2020 it's transitory inflation. And actually they were right. The inflation that existed in 2020 has gone into deflation today. So unfortunately, we've had two independent waves of inflation since then. And so superficially, again, the Fed looks like it got it wrong. So it can't afford that degree of complacency politically, I think.